over. Hey, Jamie and Steve, how was Monday?
I believe it fits the definition of a Monday. How about you, Steve? Mute, soft
Oh,
mute,
sorry.
maybe?
Yes, thank you. Yes. Double thumb. Double thumb. Yeah, it felt like a Monday to me, Jamie.
Yes, it did. It did. Because we'll get into the details of why it felt like a Monday in just a little bit here, but just want to welcome everybody to the June 15th edition of Office Hours with myself and Mr. Steve Gomez. We'd like to thank you guys for attending because we know you're busy, and we appreciate the fact that you like to pop in here, have what we hear to say, and hear what we have to say. So without further ado, let's just get on with the legal mumbo jumbo here. We're all big boys and girls here and just want to make everybody aware of the fact that all the information that we share with you in this webinar or any of the other webinars that we're coming at you with every week is for educational purposes only. If you do need investment advice, please seek out a registered investment advisor or someone like a Series 7 stockbroker. You know, there's a lot of licensed people out there that can legally dispense, buy and sell information to you, but that's not what we're here for. We're just here trading and using the technology that we've helped create and showing some cool trading windows. So I think that will cover it. Always like to take a little bit of time at the top of the hour here to let you know about the community that we've fostered around the award-winning tech that is TI Pro. And we got Barry's trading room, or it's the TI trading room, but hey, Barry's the boss in there. He's the moderator. And the only, well, I'd say Barry's definitely the best thing in there. Second best thing is the price of $0.00. If you've shopped around the web, you know that trading rooms typically aren't free if they're any good. Well, being part of the TI community, you get one at no charge with 400 or 500 traders in there every day. Barry does a fantastic job at moderating the crowd, you know, keeping things civil in there, and also showcasing his trading style and the way that he uses the TI tech. So a great place to learn, especially if you're new. But then again, we've got people from all, you know, all over the board from the trading spectrum in there, from the beginner to the seasoned pro. Bottom line, if you haven't been using it, do yourself a favor and get in there. Of course, myself and Steve, we're going to take Mondays here with the Office Hours webinar. Then you get Steve taking Trade of the Week on Tuesdays. Dan and Brad rounding it up with Hump Day, the Q&A demo, usually giving you a peek at new tech that's coming down the pipeline, or new features, I should say, within TI Pro. And he's going to do the Thursdays, and I ride shotgun with him on Friday, the ever popular daily support session. Not just on Friday anymore, ladies and gentlemen, but Monday through Friday. Kind of a little Freudian slip there. It used to only be on Fridays, but was such a big hit, we decided to take it every weekday from 12 p.m. to 1 p.m. Eastern. Anything TI related that you have questions about, you can pop in there and get live help. If I go to the next screen here, you can see, well, Jamie fumbled, hold on. The daily support session web link here. Go away, there you go. trade-ideas.com/live. You can bookmark that because it's there each and every day. That's a static link, and it kicks off every day at 12 p.m. Eastern. So if you haven't been attending, great place to learn and ask questions. New accounts through the roof since we launched AI, and I can tell you from looking at the back office just about every day, especially since our last test drive, new accounts are continuing to go through the roof. A lot of new players in the game due to outside macro forces that have kept people at home. Well, guess what? Since there's no sports, a lot of people have been coming into the markets, all right? A lot of people entering the markets for the first time. In the end, will it continue to be like that? Your guess is as good as mine. We've all got front row seats, so we'll see what happens. On the same topic here, since we released Brokerage Plus, our live transactions that we're driving through IB have been going up consistently every month. I think we're on pace to have a record month this month as well. But as you can see here, live transactions are in blue, demo transactions are in orange. Typically, people are going to put in a little bit of practice time before they take it live, and then those oranges are going to convert over to blues. That's what we've been seeing moving forward, and we'll probably see that in the not too distant future and just in perpetuity, I do believe, because people are telling us that they like Brokerage Plus by using it to trade. If you didn't like it, you wouldn't be sending thousands of transactions through it. So Brokerage Plus, everybody's loving it. We love it. We're going to continue to enhance it. And if you haven't been using it, you'd probably ought to get in there and start using it. Don't do yourself a disservice. Moving right along here to today's class. As always, we're going to let Steve talk about the market recap and the overall indices. So Steve, if you're ready to enlighten everyone, I'm going to kick it right over to you.
Sure, I'll
Oops,
try and
hold on, I made him. Scott should not be the presenter. Steve should be. There we go.
clear your screen, Scott. All right, you should have eyes on my screen here. I will expand the daily a little bit and start off with what I usually do is the S&P 500. That's really the broadest index that I think is telling the biggest picture. I'll elaborate on that in a second when we get to the NASDAQ, but here we are. And I think the last time we spoke, let's count back. 1, 2, 3, 4, 5 days. The last time we spoke, there was this day right here. Not a problem in sight. I was saying this was clean air, but I did throw a caution. I said, you know, this gap and this space that we've got here between our 10-period moving average is getting a bit too much daylight in there. We might need a healthy pullback. Well, didn't really realize we would get an incredibly goofy Thursday last week where all of a sudden the market started paying attention to something and it had a big old gap down and a gap down and a run down. Not to be confused with what we had today, a gap down and a run up. So a lot of conflicting signals here, but in the end, when the smoke clears, this is what I still see. And I remember talking about the importance of this 200-day moving average, this flat, if you will, 200-day moving average, a neutral 200-day. And I said, what we don't want to see is a bunch of closing candles below that 200-day that start to bleed down below that. That would not be good. So it appears that the market is kind of seeing the same thing I am, or the traders anyway, the bulls kicking the ball back into play. We closed at pretty much at the 200-day on Thursday. We'll call it that. We attempted to close on Friday and bounced right back up and closed back in play. And then today we opened below and closed decisively above. We cannot get this market to close above a 200-day moving average. So if you were moving all your chips over to start piling in short, I don't know if that's the move just quite yet. If we would have had some follow through today to the downside, yeah, that could have been the case. But there's a lot of kicking and screaming going on here. This market does not want to sell off based on the last 3 candles that I saw. But most importantly is anchoring that 200-day moving average. I really felt that was a line in the sand, and it seems like that could be the case. So I will continue to watch the line in the sand of the 200-day. So that brings us over to the NASDAQ, the Qs. And again, we were back here, 1, 2, 3, 4, 5, back around this level right here. Same thing, we just lack of event-driven march upward is what we had. But we got some of the same selling on Thursday, some of the buoyancy on Friday, and then same thing, closed down and gap up. And when I look at this thing, I am just amazed that we actually reclaimed the 10-period moving average today. All right, there it is right there, superimposed. Amazing. This NASDAQ is beyond resilient. It's where all of the leadership is. So it's technology weighted, of course. And the big caps, your Apples and Amazons and Googles, and they're just Tesla's continuing to drive this NASDAQ tech-laden index higher. There's not as much energy and not as much financial in the queue, so they just seem to have a much higher buoyancy. But why? You know, if you'd have told me Thursday, maybe Friday morning after we were selling off that we would be, reclaiming the 10-day moving average as early as Monday, I probably would have laughed. But then there's really not much to laugh at these days, inside the market or outside the market. Anything goes, and it's probably just only going to get more and more crazy. And our market probably will be a reflection of the insanity that's probably going to be coming here over the next few months continued. A quick look at the Dow. Interestingly enough, I'm not going to base a lot of decisions on the Dow. I told you I based the decisions for the macro stuff on the S&P 500, but the Dow is having a hard time getting back above its 200-day. We'll see how that works itself out. And then the small caps, yeah, they've just been lagging the whole way up. So all of these things combined, I will speak more to it tomorrow when I do my Trade of the Week webinar. The trade of the week was cash. As we went into the weekend, we basically had something that looked like that, just a lot of broken charts, and all the charts out there were pretty much looking like that, and there was no point in trying to shoehorn a trade just to have a trade of the week with a symbol in it. Every now and then, it's just a nice friendly reminder to take a pause and say you don't have to be looking for a trade if there's nothing there. And with the backdrop of what the market gave us, there really was nothing there. So I think we all even agreed here in kind of a conference into the weekend that there was really no need to try and grab a trade of the week in a specific symbol format. So just go to cash. Let's watch the jump rope this week and see if things start to line back up next week. If they continue to do like they were today, we might have some nice longs setting back up again if things don't resume like they did Thursday. And for the most part, that seems to be the case. So that's all I've really got for you, Jamie.
Well, thank you very much, Steve. Yeah, a lot of uncertainty out there, and I guess I was pleased to see the market kind of show a little bit of resilience after the gap down. Well, let me grab it back from you right here. Okay, should have eyes back on my screen.
Yes.
Okay, thanks a bunch, Steve. So expectations for today. Of course, before this day played out, we had really no idea what was going to happen after the market opened. All we know is that we gapped down significantly. So what I've got up here, we can see I've got the SPY up here. We've got the 15-minute intraday candles. So when we're, sometimes we come into the market with preconceived notions. That can be a bad thing sometimes because a lot of the times logic and reason don't really apply when we're talking about the market or many other things for that matter. However, how could we have prepared ourselves a little bit for what might happen? And a lot of you out there probably know what I'm going to talk about next. And, I was attempting to answer some questions by Peter there. Wasn't too sure about your number 2 there, Peter. Depends on what window you were referring to. But the word count is the key word here, okay? Because my large cap compare count window kind of gave me a little peak or a little edge today, and it was a beautiful thing. So we're going to talk about the expectations and what the compare count readings were on my large cap compare count window, which this is what it looks like right here. And if we pop into configure, we're going to notice that each compare count window has a green data side and a red data side. And if we look on the green data side, stocks hitting highs. All right, pretty simple, not a lot of rocket science going on there, with a pretty sparse filter set as well, foregoing the traditional volume metrics and just saying, you know what, don't really care about the volume. I just want to know that it has a market cap of 4 billion or greater, all right, letting me know it's a relatively liquid stock, high cap stock, and we're requesting a little turbo style volume in there as that new high is being hit of 3 times greater or normal. Now, if we look on the other side, it's the exact same filter set, but we're looking for stocks hitting a new low. So what I do is I look at what this window says after the first 15 minutes, and many times, but not every time, it can give me a little glimpse into what the overall action for the remainder of the session might be like. And this is what it looked like after the first 15 minutes today. All right, 64% green, bullish to the upside, which is a pretty significant bullish count there. When we're talking about these counts, really don't perk my eyebrows too high unless we're seeing something above 55% one way or the other. Really pay attention when it gets above 60. And today was the classic example of that. Because when we're eyeballing the charts, a lot of, we draw a little line right there at that little area that acted as support. Actually, that's a little too far down, the tops of these areas, but could have easily gotten down a little bit lower. And, a lot of people were thinking that the 50-day may come into play there, but it did not. And look at what happened after the first 15 minutes of the market today. After the first 15-minute candle, wick down, this candle closes, let's see where we closed there, 298.72. I had a line there, but I guess it disappeared. But the bottom line is this: after that first 15 minutes, seeing that extremely high compare count to the upside, well, you see what the market did for the rest of the day. So that helps me prepare myself. It can help you prepare yourself as well by watching windows of this nature to try to give us a little idea what the institutions might be up to. Why do I bring institutions into it? Because in the end, that's what drives market action. It's not the day traders. It's not me and you and everybody else sitting around. Although if you're on social media, you would think that Robinhood traders control the market these days, right? And that's just all, whatever, something to talk about. Robinhood traders do not control the markets. Institutions control the markets. The people, the entities that are buying big, large chunks of stock that they have to buy and sell all throughout the day. They can't just get it done. So really that's what the theory behind the compare count window is it's giving me a little peek into what the institutions might be up to. And the theory behind it is that they've got big chunks of stock to buy, big chunks of stock to sell, and they can't do it all on the open. They can get bits and pieces out, and that's what we're using. This window is what we're using to attempt to track that, okay? So, a very good tell after the first 15 minutes on overall market action. That tells me, hey, Jamie, you might want to focus on longs today. There might be some good shorts, but you're be, fighting the current. So why fight the current? We want to go with the current. We want to go with the trend, whether it's intraday or long term. So that's my little spiel on not only the compare count readings, but the logic behind them. And this window, if anybody's wondering how they can get it, is in the Trader's Vault, which we can see right over here on the channel bar. It used to be called Channel 4, but is now called the Trader's Vault. And if anybody can't see it, I'm talking about this guy right here. Hold on, there we go. All right, still getting used to my EpiPen there. So without further ado, let's get on to the rest of the presentation here. All right, now we're going to talk about Holly, who is, not the most active today, but if we focus over here on the channel bar, we had Holly 1.0 kicking out 2 trades that we can see over here, 2.0 also following up with 2 trades, and aggressive Neo kicking out 50% more trades with a grand total of 3. So we only had 7 signals from the entire AI, from the entire 3 modules today. Not a very busy day, and not surprising with the recent market action that we've had. You're going to see the AI produce the most trades when we're in a clear uptrend or downtrend, and not see so many crazy days, gap down, so forth and so on, because the AI is taking all the information for the past 64 days and basing its statistical probability on that. When we get craziness, it makes it harder to find the alpha from a statistical standpoint. So no big surprise to see that we only had 7 signals today. But let's take a look at those signals, because just about every day there's a little opportunity in there, whether we see, pointer, there we go, whether we see crazy moves or not. So here we can see the entire AI blotter. Always get the questions, well, how can we see everything? Well, we can see all modules here, and we can notice that the segment right here is going to be identified each and every time a signal comes in. And what I typically like to point out with the AI is taking the conservative profit column and looking at moderate profit column. And we can see here a couple of decent spreads in here. BSIG, conservative profit, $88.96 versus moderate profit of $136. So there is a spread between conservative, and let me just highlight this just in case anybody's having a hard time seeing here, conservative and moderate here. 88.96, 136.22, a little bit bigger spread here on CUE, 1671, as opposed to $40.48. So while there is spread, it's not lighting the world on fire. A lot of the times we'll see much bigger spread, but the point is we're looking at this in retrospect. In the middle of the day, a lot of the times we can ignore an AI exit signal and stay in the trade and take a little bit more risk and do better in one of the more aggressive modes, such as moderate profit or aggressive, than the AI can do making its exits in conservative profit mode. So let me get rid of that pink stuff right there. And let's just take a look at the first one here, BSIG. A lot of things I like about this chart. Number one, I like the nice tame action that we had. We counted up here almost 2 hours of tame action, and we can see almost 2 hours, not quite an hour and 45 minutes into the market today is when the BSIG was triggered from breakout long. The entry price here, corresponding with the blue box, $10.11. And we can see Holly getting long right here in this candle, okay? Corresponding perfectly with the breakout that we see here on the intraday. Now, when we go over here to the daily, what do we got going on here? We'll get back to that in just a second here, all right? So first and foremost, a nice clean entry for Holly right here. Get about another 30 minutes of sideways action. What do we notice right here? What's the green line that Steve and Andy and I talk about all the time? Well, that is the 10-period fast line, which is a really great indicator for a stock in play. You can see right up here, 10-period SMA in green. Levitating well, okay? A lot of daylight in between the price action and that 10-period, keeping it propped up there. But after the entry signal, we get a little stair step action here. Would have been a great time to maybe add a little bit as it gets up here, mills around for about another hour, and then moves higher out of this little trench right here for a move higher before kind of capitulating back down and flattening out into the open. So just a nice clean trade from Holly on this one. But the bottom line here is the spread between conservative and moderate profit. This is where Holly got out, this shaded area right here, this candle right here, that's where she makes her exit. Now, to me, this little hour of consolidation right here, instead of making an exit, would have been a great time to tack a little bit on for the rest of this move right here. And it corresponds perfectly with this little area back here that acted as supply. As soon as we hit this level over here, going back to February of this year, all the way back to, looks like November of 2019, boom, some supply came in, took a little breather, and that was all she wrote for the day. So, you know, got about as much as it could have on the daily there. But all in all, a nice little move, a nice little area over here to add to the position, or just ignore the AI's exit signal, and we could have stayed in it till the close and still made significantly more than what we're seeing right here. And by the way, $88.96, 136 holding into the close. What are these numbers all based on? Well, I'll give you a little peek at my AI position sizing real quick here. Tools and options, and we go down to AI trade size. All the numbers that you see reflected in my blotter here are based on risking $100 per trade, regardless of share size. The AI figures it out. It's like, okay, if the stop gets hit and the user only wants to lose $100, then I should buy this many shares. So you'll see each and every share amount is going to vary right here based on our risk parameters. So 278 shares with $100 risk on BSIG there. All right, let's take a look at Q. This was a really nice, give me my pointer back there. This had a little bit of both in it, okay? Now, AI makes an exit up here, takes a little bit off the top, $16.71. Nothing to write home about. And then, you know, at first, we're thinking to ourselves, we got a little bit of an uptick here, but not a whole lot of price action from the time that the AI got out. I'm more interested to what happened after it peeled back, getting very close to this stop area over here. All right, 25.91 stop. AI makes an exit. Whether we decided to stay in it or not, the area of interest that I'm talking about is down here in this little consolidation period that lasted for about an hour and a half, almost 2 hours. Getting very close to the stop area and then putting in this wick right here. These are always of interest to me, simply because, well, sometimes the timing is off on these statistically weighted trades, but the statistical probability is good for the rest of the day. So just because the AI makes an exit does not mean that the stock could not get interesting from that point on. Now, like I said, at first the AI looked really smart, pairing its gain up there. Almost got stopped out, but when you see one of the AI trades hovering around a stop loss area but not quite getting to it, that should always pique your interest a little bit. Ish 2650 area, which gives us a great deal of price improvement over the AI. There's less distance between us and the stop loss, so we get a better price, we're risking less, and we got a pretty big move here, bigger than what the AI got on its initial entry here. And this is what we call a trade around, a stock that's been brought to your attention only because the AI traded it, right? So I hope that makes sense. A decent trade around in CUE, even though the AI didn't really maximize the profits there. And as far as the AI goes, ladies and gentlemen, you know, we can only talk about what happened. And as far as everything else, it's pretty ho-hum. You know, we did have a stop hit here, profit save. I don't know why it's calling it profit save here, probably because it flatted this short trade here in UDR. The profit save should actually probably be a reduced risk if it's a flat because there's no profit. However, if the market was a little fast and the profit save kicked in, might have been up a few pennies, and by the time the AI marked its price, it was back to zero. So, you know, we'll give it the benefit of the doubt there. Other than a stop out and a few other closed trades, there just wasn't a whole lot going on in the AI today. BSIG and Q, only the only two worth talking about today as far as any spread between conservative and moderate profit and any trade around opportunities. I see your question there, Dana, asking about aggressive profit. Now, aggressive profit right here, this is not going to use any risk management. This column is here just to show you what happens to a position if you don't use any risk management, if you just hold it into the close, all right? So that's what aggressive is. It's just buying and holding until the close. Whereas moderate profit, it uses stop losses, but ignores the reduced risk and the profit save and the timed holds. So if the stop gets hit in moderate, it freezes there and does not update anymore. But if the stop loss does not get hit, it will continue to adjust for the remainder of the day. And then lastly, conservative mode, there's 5 different reasons why the AI will close the trade. Timed hold expires, profit target or a stop loss gets hit, or the AI decides to punch out early in the form of profit save or reduce risk. And Reginald, if you're talking about the criteria to find the AI generated stocks, well, I'll give you a little sermon on that real quick here. All the signals are being generated from the strategies that you can see down here. All right, and today we had 1, 2, 3, 4, 5, 6, 7, 8, and 9 strategies make the cut. Now, just because a strategy makes the cut does not necessarily mean it will trade. And as you can see below this line right here, none of those strategies fired off a trade because none of the parameters were met. Whereas these strategies accounted for all the volume today. Only 3 strategies, kicking out 3, 2, and 2, respectively. Now, one more little thing about these strategies. The AI has a base, we'll just call it about 35 base strategies that it optimizes and backtests each and every night. And only the ones that meet the minimum score on our proprietary scoring system make the cut for the next session. So after the AI has done all of its work today, it's going to score all the strategies after it optimizes them and backtest them and attempts to improve upon them. And only the ones that meet the minimum score will show up down here in the strategies panel for tomorrow's session. All right, well, thank you, Holly, for that content, and moving right along. Okay, so I went through a little exercise myself today, kind of going back to the compare count windows. Number one, what do we have today in the market? We had a gap down. I had extremely high bullish readings on my compare count window, and not only did we filled that gap pretty nicely, right? And then moved a little higher. So these are all the things that happened today. Okay, on this day we gapped down, had the big CC readings, we filled the gap. Okay, so what I did today is I focused on some things that everybody has access to. I went to the trader's vault and I said, okay, based on the characteristics of today and what unfolded and my compare count readings, what windows stuck out to me, okay? And this is all going to tie together here about, okay, when certain conditions are in play, some windows are going to produce really good plays, and there's a correlation, all right? So I'm going to start archiving this myself and going, okay, I've seen this movie before, whether it's a gap up or a gap down. If it's a gap down with high CC readings, these windows typically do better. If it's a gap down with low CC readings or high CC readings to the downside, well then these are the windows to pay attention to, okay? And there's a gazillion different combinations that can ensue. But in the end, you got a gap up, a gap down. Did we fill the gap? Did we fill half of it and then curl back over? We can start to put things in certain containers so that when we see certain conditions that we've seen over and over playing out again with certain readings, we can go, well, these are the windows that I need to focus on today. And we've got some examples for you guys. So all the windows we're about to talk about came right out of the Trader's Vault, which you have access to just by clicking on the channel. And so let's take a peek at what I noticed today. Now, first and foremost, in the Trader's Vault, we have turbo breaks up and down, which are some windows that I created a very long time ago, which are very simple, all right? Looking at stocks hitting highs or lows on the intraday session, looking very similar to my compare count filter set, market cap of 4 billion, want that 3 times normal 1 minute volume. We also want some higher than normal relative volume to start the party because this is all at the beginning of the day. So, if something's doing 1.2 early on, well, that's encouraging. Of course, we got some crazy relative volume readings on the open, and then they start to settle out. But a little relative volume boost there, little 1 minute volume boost as well, and foregoing the traditional volume metrics and just keeping that 4 billion market cap in there. And these are the windows that I like to try and find nice crisp range breaks with, okay? Yandex, we'll just call it, Yandex, fit the bill today after about 1, 2, 3, 4, 5, 6, after an hour and a half of trading, all right? We have to give these patterns time to develop because, well, if there are no bars looking like this, well, it's not a nice tame breakout, but that's what we had today in YNDX. This coming at right at 2.5 hours into the open. So we had a nice little run up, these candles here letting us know, hey, yeah, it's a gap down, but everything was gapping down. Buyers came out in full force in the first 45 minutes. Then they became equal for about another 45 minutes to almost an hour. Now, what I really like about this one is with these wicks being put in right here, it's battling the 10 period, which is the green line. And then boom, in the 10 o'clock, 15-minute Central Standard Time bar here, we get a break above this nice tame little level here, and then we get a move higher, all right? So this was a great one. And, it's not like everything coming through here is going to meet these parameters. We have to sift through about sometimes 10, 20 symbols on any given day before we see one setting up just like YNDX did today. But once again, a nice clean range break, identifying our risk, typically using the prior 15-minute candle, not including the entry bar here. So if we're getting long right about 41.95, for a 40-something stock, risking a little more than 30 cents is not a bad deal here. And of course, never even came close to the stop level. And then we just got a nice little stair step up for the remainder of the day before giving back a little bit at the close. And what do we have here? We had momentum all day in YNDX until we got that close below the 10 period where it gave a little bit back heading into the last 30, 45 minutes into the close. So that was one nice range break. I'm going to do a couple from each window here. And Dish wasn't so bad either today. Matter of fact, it was a little bit late on this one, but we had the run up here, and then we had the little 45-minute consolidation period. And well, I could go to 5 minutes to accentuate that, but why bother at this point? Dish going sideways for 1, 2, 3 15-minute candles before making this next little leg up here. And boy, this one went on a nice run as well. Signal coming right here about the 32.42 level, and a very minuscule risk using the prior 15-minute candle there. Could have stretched it out a little bit, but a nice return compared to the risk. We got a reward area way up here. You could probably pack that risk area in there, I don't know, 6, 7, 8 times maybe. And that's what we like to see. So Dish and Yandex were two great examples from the Turbo Breaks Up, which is in the Trader's Vault. And then I picked a couple of, I can't remember if these are Steve or Andy's windows. Steve, feel free to chime in here. So once again, reflecting back around to my compare count readings after the first 15 minutes, what might I be interested in? Well, we got Jam Down Buy, which only kicked out one trade in that first 15-minute candle. So it doesn't matter if I jumped on this on the open in the first 15 minutes. When it came out, there was plenty of time to get it right here to enjoy a nice little move up, all while following the 10 period as well. Forgot to
Yeah, that
see
was a
what
quiet alert today.
Yeah, it was, and it was the only one, which I kind of like that. Not doing tremendous volume, but almost normal, getting up to 0.85 on the relative volume level there. But just a nice, quiet little signal. And most of the times you're gonna forget about trying to get the wicks here unless you have your orders out before the open hits and you got your bids down there waiting to get hit. But not necessary to capture a good move in this circumstance here. Could have bought it anywhere in that second 15-minute candle and made quite a nice little percentage on a small dollar stock there. All right, so keeping with the same theme here, that up was the way, and we knew that after consulting the compare count window there. I believe this one's Andy's, right, Steve? Random Acts of Violence. And this
Yes,
one
that
spit
sounds like
out
an
some pretty
Andy
good ones
title.
today too. And it was not overloaded, right? So you see, ladies and gentlemen, I'm just as guilty as everybody else. We created the Trader's Vault, myself, Andy, Steve, and Sean, because it contains all of our favorite windows, right? So, no need to reinvent the wheel here. Of course, I always encourage people to create, but you got a lot of high quality alerts and top list in that Trader's Vault. So you might want to start picking out some of your favorites, going through this little process that I'm going through and going, okay, when the market does this and the CCs say this, I know what window to go to. And of course, it's not going to work 100% of the time, but we don't need 100%. All right, so random acts of violence, which are these, violent down moves here. We had Home Depot. Everybody knows who Home Depot is. And my arrow is a little cut off there. I don't know why. Maybe I'll just kind of circle it there. There's where the arrow is. We can just see the top of it. But man, what a nice entry signal here on Home Depot. This one not coming on the open, but coming pretty far into the session. About an hour and 45 minutes in. We'll just call it 10:17, 10:15 area on the central time zone. And that was pretty much the bottom. Once again, maybe you get the wick down. Who cares if you don't? Anywhere in this area right here, anywhere in those two bars would have been pretty cherry for Home Depot by today. So that's the first one out of random acts of violence. Let me hit my trash can here. And then we had scrolly. We're looking at the first occurrence of each of these guys. CCIX, not a bad play here as well. Coming a little bit later, but not quite 2.5 hours into the open. So you see what's going on here. It's picking these bottoms really well. CCXI was next on the list here, and it didn't have to get it on the wick here. Anywhere in this area right here would have been acceptable. Anywhere You can see right here before you get that move higher. Now, of course, this one didn't last a long time, but hey, positive move in our direction is always what we want, whether they keep going or not. Probably going to be more of a function of volume and where we might find some supply on the daily here. But kind of interesting over here when we take a look at the chart here. Okay, looks like CCXI is popping, but we're going to confirm it on the weekly as well. And yes, we can see as we get back up here, we're flirting with all-time highs. So it looks like this one, might not be a bad one to keep an eye on moving forward. We get some volume, we get a breakout above this level here. Might be one to keep an eye on moving forward for a nice little intraday or hybrid swing trade there. And what do we have next? CCI, we already talked about. We talked about Home Depot, CCXI, and PTGX. Talked about that guy as well. Vert, okay. Well, you can't win them all right. Vert was the loser out of the 4 that we just looked at. But hey, 3 out of 4 ain't so bad from any window. If I had a window that gave me that every day, well, I probably wouldn't be sitting here talking to you guys. I'd just be ironing out my $100 bills and keeping them nice and crisp. But there you have it. And really, going back to the beginning here, it's generating a methodology. What is the methodology? Well, we had the gap down today, didn't really know what to expect. Let's sit back and see what happens in the first 15 minutes. Okay, I got my accelerated CC readings to the upside. Okay, I should probably focus on long. Which windows did I notice did the best today in this market environment? And keep in mind there's moving parts, gap up, gap down, gap fill, no gap fill, CC readings, so forth and so on. But by watching each and every day and noticing the correlations, this can help us pick which windows we need to focus on based on different market conditions. I used to be a big movie buff. I'm kind of disgusted with Hollywood these days, but I will use a quote from Inglourious Bastards, Brad Pitt character. How do you get to Carnegie Hall? Practice. Okay, and this is a form of practice that can be repeated each and every day, and it's not too difficult. You look at this, you see what the gap is, you look at your CC readings after the first 15 minutes, you pick your direction that you should focus on, and then you notice which windows do better in those market conditions. Okay, so just some base elements there. If we boil everything down, questions that I need to address here before I bring Mr. Scott in to tell everybody how they can save a little bit of do-re-mi?
I don't think so. I think we hit them all.
Okie
Info
dokie.
at trade-ideas.com with anything that we didn't or couldn't answer.
Yep, that is the place to be. All right, Scott, if you're ready to walk us out, we're ready for you.
All right. Yeah, a couple things on the way out. We do have a new ebook that's been out for a little while, and it's a great one to grab. It's all about earnings season. It gives some great strategies for you to use during earnings seasons, and links for you to add those strategies directly to your layouts. So go ahead and go to trade-ideas.com/earnings and grab that ebook. It's been really popular. We've got a podcast. Have had some great episodes out this week. We were going to have one out last week, but there was a recording problem, and we're going to get that out as soon as we can. But search for Trade Ideas Podcast wherever you listen to your podcasts. We've released some nice interviews this year, so go ahead and listen to those previous episodes and add us as a subscription so you are ready to receive the next one. There's a code good this month, Holly Summer. Just go ahead and plug that in if you're purchasing a new subscription or going to do an upgrade, and it'll save 15% off your first month or year of Trade Ideas. Any questions at all, shoot them to info@trade-ideas.com. That goes into our help desk software so it doesn't get lost and gets routed to the appropriate team member to help you out fast. So it's info@tradeideas.com. You can follow Jamie on Twitter at QuantBot. Steve Gomez is at TodayTrader. Also look for @TradeIdeas. Facebook.com/TradeIdeasPro is the Facebook page to like and share everything we post with all of your friends. Thanks, everyone. We'll get the recording up later on tonight or tomorrow. Bye, Jamie. Bye, Steve. Have a good one.
Yep.
See you then.
We'll see you tomorrow. Bye-bye.